Hello and welcome. In this video, we will be discussing the recently issued amendments by SEBI for ease of doing business with respect to BRSR. Most of the amendments issued by the SEBI are with respect to the ESG disclosures of value chain partners to be made by the listed entities. This was supposed to begin from financial year 24-25. The first amendment is with respect to the scope of the definition of value chain partners. Value chain partners were originally defined by SEBI as including the suppliers and the distributors, that is, the value chain partners in the upstream and in the downstream, cumulatively forming 75% of the total purchases and sales of the listed entity. However, based on internal research by an expert committee and feedback from the industry, it was realized that using this criteria, in certain sectors, the number of value chain partners came to more than 1,000. Now it is impractical for any listed entity to disclose ESG data for 1,000 value chain partners in its sustainability report. Therefore, SEBI came in with an individual cap of 2%. Now, after the amendment, value chain partners are defined as all the upstream and downstream partners whose individual transactions with the listed entity are more than 2% of the total purchases or total sales of the listed entity. It may be noted that this 2% cap is in addition to the 75% cumulative cap of the total purchases and total sales of the listed entity. Now, with these two criteria both in place, the number of value chain partners has reduced considerably and in most sectors is below 40. There is also an amendment which says that the listed entity shall disclose the percentage of coverage of purchases and sales after inclusion of the 2% individual cap. The second amendment is with respect to applicability of the value chain partners' disclosures. The listed entities were supposed to include the value chain partners' ESG data in the sustainability report from financial year 24-25 on a comply or explain basis. The same has been deferred by 1 year and will start from financial year 25-26. And the nature of the disclosures have been changed from comply or explain to voluntary, thus easing the burden on the listed entities for disclosing ESG data for its value chain partners on which it has practically no control. A linking amendment has been made in the value chain partners assurance. The value chain partners ESG data was supposed to get limited assurance on a comply or explain basis from financial year 25-26. The same has also been deferred by 1 year and would start from 26-27. Again, the assurance of the ESG data has been made voluntary, thus easing the burden on the value chain partners and also giving them more time to develop systems to generate data for the BRSR Core report. Another amendment is with respect to the previous year data in the first year of reporting. When the listed entities report the value chain partners ESG data for the first year, that is in financial 25-26, the corresponding previous year figures, that is the figures for 24-25, will be voluntary, thus easing the burden on both the listed entities and value chain partners to generate data for financial year 24-25 also. The next amendment has actually added another disclosure as a leadership indicator under principle number 6, which is protection and restoration of environment. This disclosure is about green credits. Green credits generated or procured by the listed entity and top 10 value chain partners will be disclosed. What are green credits? Green credits are credits issued by the Ministry of Environment, Forests and Climate Change and will be governed by the Green Credit Rules 2023. Green credits will be issued for activities like afforestation, water management, and sustainable agriculture. The next amendment is with respect to replacement of the word assurance with assessment or assurance. Why was this done? Assurance is a technical term and is somewhat closely associated with the audit profession. Assurance had to be done by qualified professionals following stringent criteria set by the international standards. Therefore, it was very expensive for the listed entities or the value chain partners to get their sustainability data assured by the assurance providers. On the other hand, assessment is the validation of the ESG data and is a much lesser cumbersome affair. SEBI has made its intentions very clear that it did not want to limit the activity of validation of ESG data to a particular profession. Therefore, it made this amendment, thereby opening other professionals to enter into this field. An assessment shall be conducted by the third party as per the standards that shall be issued by the Industry Standards Forum in consultation with SEBI. So the Industry Standards Forum, which comprises of ASSOCHAM, FICCI, and CII, would develop separate standards for assessment of BRSR in consultation with SEBI. So those were the amendments brought by SEBI for ease of doing business with respect to BRSR. Thank you.